Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, October 20th, 2021. It's 12:23 Eastern Time as I'm starting the video, and I really wanted to do an update on gold, metal, the precious metals, and mining stocks. But I will start out with an update on the market. We do have something worth noting today, and that is this trend line. I've added a pretty steep uptrend line here on the 60-minute chart, which I believe is going to trigger the next pullback. We're right pushing hair above that 373.42 to 374.46 ish resistance zone right there, that I said really is the upper limits of what I want to see any bounce go, and still keep that the case well intact, I should say, for that next leg down to T3. T3 is still down there at just above the 342 level. I'm be conservative. I rounded up pretty high, 343. So that's what it looks like, and now we're starting to crack that level. You'll also note down here, it's not just the trend line break. It's enough reactions to help validate the trend line, but you have a nice high level bearish PPO crossover. High level means it's up here above all the previous ones, and you can go back a ways and see what happens. One way to look at that too is if you go to the PPO histogram, that's going to visually show you the crossovers. Let me just focus on that. Let me pin these other ones up there, show you the PPO histogram, and take a look at that real quick. So you see this is the crossover right here, shows you the lines of cross. Last time we crossed was right there. Obviously you didn't want to be long, we had a correction. These are little whipsaws here. This is the big hill. You want to see these big hills. This is what I call these things. That is not a circle tool here. We'll use a square. There's a hill, there's a hill, so there's your crossover. Here's your big hill, there's your crossover. And again, did you want to be long or short after that PPO crossover? And so it doesn't work each and every time. Here's the next hill right there. There's your crossover. There's what happened. So that's that. We'll see what happens there. Now, I will say, you take it with a little bit, a pinch of salt, not a grain, maybe a pinch of salt there, not too much. That the fact that it comes on the heels of that big divergent low I talked about. And, as I said, those have always been in the past for many, many months now, actually over a year, the catalyst for the move to new highs and beyond. So you still can't rule that out. But again, if you've been following me lately, it's all about the weekly charts. Today's Wednesday. I'm not going to get into that. I want to focus on the precious metals now. And it doesn't matter what I show you today on the weekly chart, because a lot can and will likely change before noon on Wednesday, where I'm doing this video, and the end of day Friday. So let's see what happens. There's still, if the market can do this by the end of the week, the more of that it can do. The more upside it can do, the more it's going to chip away at the bearish case on that weekly chart, and the more it can go down between now and the end of the day Friday, the more it will help to solidify or keep those sell signals and bearish developments such as a PPO crossover, divergences, everything else intact. So let's again, we'll revisit that. I'll continue updates. Now that we've cracked this line, I'll certainly give you an update, if not later today, by tomorrow morning. So let's dive into where the easy money's been made lately. And that would be, at least in my opinion, the metals. One of my favorites recently. Silver mining stocks, gold mining stocks. I told you I have a preference at this point in time to the silver miners over the gold miners. And you can, and that's reflected in how they're doing. We had a little 2-day correction, but it wasn't just a random, correction. If you don't read the charts, it might have seemed random, but remember, we hit the trend line in silver. This is not silver. This is a silver miners ETF. SIL is your silver miners ETF. SLV is the silver ETF. I'll get to that in a second, as well as the futures. But you can see those miners consolidated here right on the trend line. That is a reaction, and that's the most bullish type of reaction you get in an uptrend. It was a pretty strong run to get to that trend line, and you could have a reaction with a pullback and then another thrust up. But what happened, you consolidated on the trend line 2 days, broke it, took out the 3902 resistance above it, and so nothing but check marks today and even yesterday on that. And let me see if I can squeeze this chart in. Let me see if I can grab. Yeah, okay, I got it into the screen here. And so, well, these it's not very big, but let me just sort this up here. These are just some of the silver mining stocks, not all, not a comprehensive list, but just a handful that are in this ETF right here. This is the what I call the senior silver miner ETF, the big one. I'll get to SILJ in a second. CD up 7%. GATO almost 7% as well. AXU 6%. I'm just rounding off here. BVN 6%. HL 3.7, et cetera, et cetera, et cetera. So when you look at GDX, of course, it's doing well. CDE, which is actually more as much of a silver mining stock as it is a gold mining stock, it just happens to be a component of GDX. And I'm just going to read them. That one's up 7%, 5.7, 4.4. But on average, you have a lower average. And you can see it right there. There it is. What am I doing? We'll just look at the ETF. Up 1.91%. Again, that's gold. GDX, the gold miners ETF, and then SIL, as I said, up to 0.28, and so it's outperforming. This is usually the case. And then you always get a little more juice, not always, but usually with the juniors, SILJ, just a beautiful looking chart. Let me get this squeezed back where it was. Just bear with me. Okay, there it is. Now we can look at the chart in full size. So that's it. The story of the silver miners, that's SILJ, the juniors. We had a nice rally there, very well-defined uptrend line. You started at this point here to get negative divergence, and that divergence panned out. You had a breakdown back test, and then what happened is the miners corrected, and they corrected more so in time than price. It was a multi-month, almost a year-long there sideways trading range. We just broke down recently below the trading range, but snapped back above it now, and that's bullish. So what that gives us is a false breakdown, aka bear trap, meaning the bears will short when they see a break of support like that. And that support was about 1273, but what they weren't looking at is this bullish falling wedge. They weren't looking at the positive divergences, which said that this breakout or breakdown was likely to fail. But what they are looking at now is the fact that we broke out of a downtrend line, and or more importantly, again, everyone sees things differently, that level has been recovered. So look, is it guarantee we're going to do this now? No, there's a lot of overhead resistance. That's what you get when you get these trading ranges here. That's what we call supply, a lot of overhead supply where trades happen. So we need to power on through there. I think it'll happen. Probably won't be a straight shot up. You can see some levels along the way. But again, I just wanted to do an update and say it's been nothing but bullish price action so far. And we're coming up to the next resistance, but I still like the miners. All right, that's SILJ, the juniors. You can do GDX, or that's the regular gold mining ETF, or you can do GDXJ, which are the juniors. So you're going to get more bang for your buck there. Juniors are your smaller mining companies, just like small cap stocks tend to have a higher growth rate than large cap stocks, because large cap companies are more mature. Their growth rate's typically not as fast than smaller companies. Same thing with the miners. The smaller miners have more risk. They tend to fall harder when things get ugly. They're not as fundamentally sound, but when the music's playing, meaning gold and silver are rallying, they tend to do better. And there's GDXJ, and you can see just that's it, nothing more. Just beautiful looking charts, nice divergences, positive divergences, and this is swing trading. And so bigger picture is an investor in the gold and silver stocks is going to be frustrated for the last year or so. But all these divergent highs and divergent lows were pointed out. These are swing trading ops. This is where a swing trader over the past, what is this? We're trading today where we were in GDX about all the way going back. Box will tell me 1.8, almost 2 years ago. That's where we were. Same, actually go back here. There it is. Let's just go from this point. That was 2.2 years. So if you're an investor, it's not that these guys are not kicking off the biggest dividends. You're back where you were. You've made nothing. You've seen your account go up a little. You saw it go down a lot. Then you saw it go way up, and you're back to exactly where you were. Whereas a swing trader, you don't have to get every penny of each of these rips and dips, but when you catch the bulk of it going short of a 56% drop, catch even part of that 230% rally, or part of the good part of that 44% drop, or you don't short and you sidestepped it, because that's what I recommended back here. Get out of even long-term traders. Time to maybe book some profits, tighten stops. We're looking at a correction in the miners and metals, and so again, if you just do that and sidestep the givebacks, or what the site is mostly about is swing trading, then you've made well over 100% on your money over the past couple years instead of 0%. Okay, let's wrap the video up with a quick look at the futures. There's gold futures, symbol GC, still coming off that divergent low, which was a catalyst for this near-term uptrend we're in. Still looking at move up to that 1809 and then 1838-ish level there, and then that's a very big level. If and when that breaks out, that should be longer-term bullish for gold. So those are still near-term targets, still holding above the trend line. If that trend line happens to break, we still have some pretty decent support below at this point. But like I said, it's right now it's looking pretty good. SI again, leaning that way. This is a 2-hour chart, meaning every candlestick you're looking at is 2 hours instead of 60 minutes. We're going back for 6 months, and there's our primary downtrend line. We hit it the other day, consolidated. That was the second target. We had a target here, broke out. We had a couple pullbacks to that 23 level, which were highlighted as objective long entries or add-ons there. And then there's the breakout. After we hit it, consolidated, broke out, ran up, hit my $24 target, had another reaction there. I mean, this is swing trading. This one's been just laid out since back here. That's it. And we're above it, and so anything can happen, but the odds favor now that especially the fact that we hit it and had a reaction already, that odds favor that we come on down up through to this next target there, about 24,867, so forth and so on. No change in the US dollar. DX 60-minute chart here, bearish rising wedge. There was our breakdown. And counter trend rally, snapback rally, we're starting to head lower, and this is all the makings of a near-term downtrend at this point. And there was our sell signal, and remember, gold moves inversely to the dollar, so still think there's more downside to come there. And then you can look at the euro, which gold moves positively correlated with. So you want to see the euro up, or at least bullish posture in the euro to confirm your bullish outlook for gold and silver in the mining stocks. And that's what we have. We had the downtrend line there taken out with an alternative or BOD, benefit of the doubt trend line, following a nice divergent low. That's a beautiful bullish falling wedge pattern, just like this one was. And then you had a nice rally and a trend. And all trends come to an end, usually when support's broken, a trend line, something like that, and that's what that was. And there's a breakout, so that downtrend ended there. We've been moving up, and again, this one just, if you don't even trade the metals, you just trade the euro. We've had multiple objective long entries and exits here. There's a breakout, go long, breakout again above 115.98, take profits at that 116.29 target resistance, cycle back in on pullbacks to the 115.98 resistance. Once broken, becomes support. Consolidated there for a couple days. Broke out. There's your next buy signal, ran up, almost hit. I mean, close enough. Remember, these are all these charts. If you don't see the word T1 equals with an equal sign, there's the actual resistance level. As a rule of thumb, I like to sell a little shy. That one came quite a bit, but still just close enough. So again, you can call it a hit, don't call it a hit. Doesn't matter. You still had an objective re-entry and a pullback there. And if you're actively trading, maybe you got out, maybe you didn't. And if you didn't, you would still have a stop. You would at least want to allow for a pullback to that previous breakout level and have a tight stop below or a stop below the next one down there. And so that's where we're at. So I think we'll hit it. Now, when we hit it, again, you can count this as a tag. It came close enough to count that as a hit and a reaction. So we may, what I'm getting at, we may or may not get another reaction again. But either way, a solid break above that level, 116.88, would be bullish, and that should open the door up to the next target. There's probably some micro levels on the way. It's not going to be a straight ride up, but I think that's where it is and has been my next target on the euro, and I think we'll get up there. That's 117.90, and if we do that, that's going to be should be bullish for gold and silver and the mining stocks. And for those of you that don't can't track futures, you can get free futures quotes from quite a few sources, including investing.com, track the euro futures, whatever, or most charting platforms will give you the euro US dollar forex pair. And this is the same thing as the euro pretty much. It's the euro against the dollar, but it's going to mirror that chart. I have the same thing. It's the E7 chart we're just looking at with the primary and BOD trend lines there, both broken. I don't have as many levels here as the cleaner version here. There was a resistance at 115.810, broke out, back tested successfully, off to the races, and again fell just shy. So that's why we may get a reaction, because we fell a little bit shy of it. Usually you get a little closer to my targets. There were some reactions there that I could see. That's where the sellers stepped in. So I would say probably one more reaction up here when we get to that place. Now, if we continue to get some momentum in gold and silver, there are times where the masses, the sheep, will finally realize, oh, the gold trade's hot now, silver, and they weren't in recently, but now they want to be in because they've been moving up. And sometimes you can see the euro correct, the dollar rally, and gold and silver still moving up. So at this point, you may want to trade each on their own merits. In other words, yeah, if we get a reaction there, is it possible and even likely you might get a pullback in the metals? Yeah, might, but remember, we came close enough already, and whether we get a reaction there or not, I think we'll break that level out. And when we do, it's just going to be additional check mark for the bullish case on the metals. Of course, anything's possible. We fail there or before then, we come back. That's not going to help gold and silver. And if we break below that level, that 158-ish level, obviously that's not going to be very good for gold and silver. It won't completely eliminate the intermediate term case. Near term, it's going to be ugly. Or should most likely put pressure, but look what would happen if we happen to take one more jog down in the euro here anytime soon. If it was a pretty quick jog down, we would still have positive divergence in place on the indicators, and it could set the stage for a move with a marginal new low there. So as I always say, the charts are dynamic, constantly changing, and I'll let you know that's not my preferred scenario, but it is one that I'll lay out that is a possibility. And so you need to define your trading style. Are you a very active short-term trader, and you want to maybe have some stops to prevent that, because there's no guarantee if we do drop down there that's going to stop and only be a marginal new low. We could keep doing that. So that's where you have to decide. Where do you want to stop out? Are you a longer-term, less active trader, trying to position for the next big trend up in the metals or the currencies? And if so, then you can allow for a wider stop, especially if you got in back here on, just before or right around the breakout in the euro. Okay, I'm only 18 minutes into the video. I'm just going to spend the next couple minutes rifling through very fast that same watch list that I've been covering for the last couple weeks here in the silver miners that I like. And that's starting with MAG, Mag Silver Corp. Look at that beautiful breakout today. That was a downtrend line last highlighted in the last update. I believe it was last week. Taking out that right at the 200-day moving average, but that one's traded through the 200 quite a bit. So I'm putting much more weighting on this downtrend line breakout. I'm just trying to say there's another check mark. There's another breakout. Remember, last update we had a lot of these stocks coming up to resistance, and so they pulled back, but this one's broken out, so that's one check mark. It's not a check mark for the entire sector. There's EXK breaking out above that 466 level. There's a reaction high there and some minor resistance. I'll give you that level right there that may come into play and will likely come into play around 510 or so, and then 548 is your next level. FSM breaking out above 465, so we're going to give it another check mark there. That's a nice breakout. And I cover these guys for two reasons. Number one, to give you a broader, a more comprehensive view of the sector. It's one thing to look at an ETF, sector ETF, and you can obviously you need to make a bullish or bearish case to be long that sector. But when you can drill down and look at the majority of the individual components, if they confirm bullish setups as well, or maybe refute your analysis, what you're seeing on the sector ETF, then you don't want to. Maybe you want to sidestep that trade. But this is just it's nothing but bullishness here with that big divergent low, nice run, and now today's breakout above 465. Thin zone up to about 590. So it's not going to go straight there. I see a reaction probably around 510, but if we get up there, that's another 21% on FSM. SVM, Silver Corp Metals, just beautiful little bullish falling wedge. Breakout back test, moving up, successful back test so far, trying to clear that previous reaction high. Let me give you a level if you're trading it right there. I'm going to have a reaction most likely around 463, so that'd be the first target, and that's about another 8% up. GPL, Great Panther, maybe didn't have this one marked up. You can see what I call, AD and ADL, almost divergent low, very close. For all intents and purposes, we can count that as a divergent low because we almost had an effective equal low there. And then also you can see you had a nice clean downtrend line breakout back test. So boom, this one's an objective long right here on the back test. And if it goes any lower and continues a back test, you're still going to have support. I'd like it down to about that 0.40 level. I can't say this enough. I always do. This is a penny stock. It's at 46 cents. Supports at 40. Penny stocks are priced that way because there is a lot of risk involved. What are those risks? Well, any day, I don't know the fundamentals of this company, but and I say birds of a feather run together or flock together, so they tend to rally with the sector. But you can have a sudden bankruptcy announcement or share dilution when they come out and issue more shares to raise capital. Those are the risks involved, but on the downside, or the flip side, I should say the upside really, is that risk and return go hand in hand. So if this one hits that first target there at 53 cents, you're talking a 25% return, not a 7-8% return like a lot of the other larger miners up to their next targets. A few more. AG, breakout of the bullish falling wedge, hit that 1276 resistance target, trying to clear it now. So I'm not going to give it a check mark yet. If we can get a close the day above there by a fair margin, then yeah. USAS just hit and it's starting to clear my first target, which was the downtrend line. This was another one I mentioned, penny stockville, high risk but high return. I didn't highlight it the low. I highlighted it somewhere here recently, about halfway up, but that's still, we've already had about a 14% run since I first highlighted a week or so ago. And from the bottom it's up 30%, and we're above the trend line now. If it can close the day and the silver miners can hold on to these gains and build on them, including this one, then it should open the door for a move up to that 97 level. And quite bullish if it can break out and recover back above $1. I love to see these little small low price stocks when they break $1. People write them off for dead, and that is because they face delisting. If it's company trades, if it's listed on a major exchange and it trades below $1 for too long, they get a delisting notice from the exchange to say if your share price doesn't get up above $1 by blah 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 date, you're going to face delisting. And so it's usually pretty bearish. However, when they recover the $1 level, from my experience, they usually shoot up because then you'll have investors buy them. Some funds that had to sell them, sometimes mutual funds that hold them by prospectus must get rid of them there. But when they get back above there, it all depends on the fund's prospectus, what they can buy and what they can't. But either way, take it on technicals. We're trading these on technicals, not fundamentals. If you're going to invest in any of these and or put a substantial amount of your portfolio in any one individual company, which is always risky because you're not diversified, then you need to do your due diligence. You need to, get on the internet and check out their fundamental position. Make sure, it's not too big of a risk for you. All right, guys, I could go on and on and on. PAAS right at that 2605 target now from the breakout. That's been an 8% run. They all look good. And again, coming up on resistance. There's a big one for that SLVP, the iShares Global Silver Miners ETF. Big resistance at 1436. That was a multi-year trading range, very well defined. We broke it there, and we're coming back to it. So we'll probably have a reaction there, would be my guess. It's a little more upside. But if and when we can recover it, get solidly back within that level, that's going to be bullish, because this whole thing then would be a false breakdown. And again, it was bullish technical posture. It's not just a random move up. So look, this just may be a bear market rally. It's still not a bear market longer when you look back longer term. Okay, let's tell you what I'm talking about. When we go back here, the mining stocks bottom in 2016, and you call it what you want, but this is by all accounts a bull market. Any trend is defined as bullish if you have a series of higher lows and higher highs, and that's what we have. So there was a bear market in the metals and miners that ended in the metals bottomed in December of 2016. The miners bottomed in, I think it was January, February of, 2015 is where the metals bottomed, gold and silver, in December. And then a month later or so, the miners bottomed. And so, again, so that's what I'm talking about. Trends, don't get confused of near-term trends, long-term trends. And so it is still my view at this point in time that was just bull market consolidation. And again, you'll have to take it on face value that that was a breakdown, and so I'm sure it shook a lot of longs out. And if so, and if we can recover it, that's a good thing, because what it does, these stops that get cleared and the longs that capitulate are what they refer to as weak-handed longs, and then you get a new subset or a new set of holders in the stock, those that held on and those that are getting in. They have stronger hands, so to speak, because if you didn't get shaken out here, if you're a long-term bull on the silver mining stocks, if you didn't get stopped out here, why would you sell your positions here? It only doesn't make sense, unless you had to get the money out for something. So, and then of course the other aspect to trading and investing, why technical analysis works the way it does. When you have a new subset of buyers that come in here, buy the breakout, saw this, and stepped in, and you keep going up here, well, they're profitable. And so what happens in bear markets, stocks and keep going down because people keep getting underwater. They get these little hopium rallies. They get excited, but they get further and further underwater. So you have remorseful holders that just want out, and that's where those rallies get sold into, and then the trend continues, just like in a bull market. It's the other way around. And so that's what would make that bullish, and then very, very bullish if and when the top of that range is taken out with conviction. Now we're talking, could be months away, could be another year if it does happen at all. I think it'll happen, and so but we've got work to do until we get there. So let's just end it here. Some of these stocks, I'm giving check marks today on some at resistance, and this is a sector ETF, so it should be noting that one's coming up on resistance, as is SIL. Strip away all the lines and just do it this way. Again, this is a sector ETF, so that's your range, and we're right there. We're a little bit above it. No, close enough to say that we're right on resistance. So again, if you're an active trader, you want to book profits or raise stops and let it run, you can do so. Overall, the action looks constructive to me based on the dollar, gold, and everything else, and I think we'll see more upside even if we get another pullback in the next few days here. All right, let's wrap it up here, get the video out to you guys, and then I'll start looking to do some updates on some of the other trade ideas. This has been Randy Finney with Right Side of the Chart. Have a great day.